A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to get the lowdown on housing ETFs now. They've been doing well lately, and our ETF research director, Nina Mishra, is going to tell us exactly why. So gaining in popularity, housing, one of the few sectors that is popular still with investors.
Exactly, and housing market is steadily picking up momentum, as we have seen from some of the numbers released recently. And yesterday's report showed that housing starts rose to a seasonally adjusted annualized rate of 1.21 million, which was the highest level since October 2007. And this followed an earlier Monday's report from the National Association of Home Builders, which indicated that the home builder sentiment is at its highest level since November 2005. And housing market has been attracting a lot of buyers as well as renters of late, thanks mainly to steady gains in the job market and still low, very low mortgage rates. And in fact, even though the builders have ramped up construction, the demand still exceeds supply, which has been pushing up prices in the housing market. And as a result of the strong trend, many housing stocks and ETFs have surged to their 52-week highs of late recently. And with the improving economy, I think this trend is going to continue.
Okay, we're talking about this on the 19th of August here. You don't see any reason why this train is going to get derailed anytime soon?
Not anytime soon, because even despite these strong gains, we are nowhere near the bubble levels. Economists consider 1.5 million housing starts, seasonally adjusted annualized rate, to be the normal level. So we are still far from there. And even though the mortgage rates have remained low, banks have been reluctant to lend. Their credit standards are still tight, and mortgage originations and refinancings have remained low. So as the economy picks up and banks loosen, lending standards, so that activity should pick up, and we should see some more gains in the housing market. And even though the Fed seems to be ready to raise rates, maybe in September or maybe not in September, sometime next year. Yep. But those rate hikes will be at a very, very gradual level. So I think after the first rate hike, they are going to be on hold for quite some time. So that should help the housing market. Okay,
so let's take a look at some of these examples that you brought with you here to highlight and underscore this whole trend. First one is the iShares Dow Jones U.S. Home Construction ETF.
So there are few ETF choices in this space for investors, but they are all very different ETFs in terms of their exposure to home builders and related sub-industries, including home furnishing, home improvement stores and all that. So depending on what investors like, they could take a look at these ETFs and decide which one is the best for them.
Okay.
So the home construction ETF, the ticker is ITB. This is the most popular ETF in this space. It has over 2.3 billion in assets under management. It charges an expense ratio of 45 basis points, and it has more than 66% of assets invested in home building stocks. Top holdings include D.R. Horton, Lennar, and Pulte Group.
So big name production builders.
Yes, big name home builders.
Okay. Then the next one is the Spider S&P Home Builders ETF?
Yes, this is also one of the popular ETFs in the space. The ticker is XHB, and this is in fact the cheapest option with an expense ratio of just 35 basis points. It's also an equal weighted ETF, so the company specific risk is quite low. And in addition to home builder stocks, it has a lot of exposure to building products and home furnishing stocks. So if you believe that homeowners are going to spend more and more on improvements and upgrades, then this is the right ETF for you. And as we saw from Home Depot's results yesterday, those were really good. They raised their guidance for the second time this year, so homeowners are willing to spend more and more on big ticket upgrades now.
Sure.
So then, in that case, this is the right ETF for you.
All right, then there's the eTrax ISE exclusively home builders.
Right, so as the name suggests, this is the right ETF for you if you want to focus exclusively on home builders. The ticker is HOMX. And this is the newest entrant in the space, among the newest entrant in the space, and it was launched in March this year. Charges an expense ratio of 40 basis points. It's an ETN, exchange traded note, so it doesn't actually hold stocks, home builder stocks, but it matches the performance of an index which comprises of home builder stocks. And top index holdings are again those big names in home building, D.R. Horton, Lennar, and Pulte Group.
So if we wanted to see how these all stack up against each other, you've even done that for us.
Yes, so this is the 3 months comparative performance of these 3 ETFs versus the broader market represented by SPY. So as you can see, because of strong gains by home builder stocks, the home builder, exclusive home builder ETN, HOMX, has been the outperformer here in the last 3 months with more than 16% gains. But the other two have also done pretty well with gains of 10.6% and 8.7% respectively.
Okay, interesting. Do you own any of these?
I don't.
Okay, check out more ETF information, not only on specific ETFs, but general ETF commentary as well in the ETF section of Zacks.com's website. Get there from the homepage using the Funds tab in the top toolbar. A reminder also, if you're watching our videos on YouTube, don't forget you can subscribe to them there and comment on them for that matter. In the meantime, with Nina, I'm Terry Ruffalo.